that I wish you saw. Sarcastic Mr. Know-It-All. Close your eyes and I'll kiss you, 'cause with the birds I'll share. With the birds I'll share this lonely view.
Okay, welcome in from Sunnyvale, California. I'm your host, Mark Vieira. I'm going to do something a little bit different. Been asked several times about, well, how do you learn this stuff and these chart patterns, and it looks complicated, and people are a little intimidated by the technical analysis side of the stock market. So I want to try to take some of that mystery away. I think I want to start first because I'll be using, this is the Thinkorswim platform. And you can do all kinds of charts, all kinds of studies with this platform, and just kind of try to push you in the right direction here on my, this is my log page. I'm going to have links to all this stuff. So here on my log page, there is a link to TD Ameritrade's. This is a free, I'm all about free. All this information is free. This is a paper trade account that I've had for the longest time, and so far I haven't had so much as a single email or anything that they've sent me to try to get me to fund any account. I think it's great. I've been using it. I even have here is just to get you started. I have a workspace, my default workspace pages in here. So in this video, I want to kind of a little mix between a tour of where you can find the information along with a little bit of a tutorial on the Thinkorswim platform. So let's go over here. I want to show you a great spot. I'm just going to click on this page. You know, there's this IchibomB, I'm not sure how you pronounce this thing, but in here you're going to find all kinds of information on futures, trading, his various styles and methodology, and how he is progressing as the market evolves. One thing I want to point out, because this isn't stuff you're going to find in your regular old everyday Google search, is just off the beaten track kind of stuff. I found there's this link to this video, and this is Peter Steidlmayer. This is a really great video. I've got another link, same link there, and I've learned a lot from, I'm still learning from this video. I'm still replaying it. Let's pause it. One of the things, if you can watch this video the first time out and get everything, then you're a lot smarter than me. But there is so much information, and what I want to touch upon is a study that he's using what he's calling market profile. And as it turns out, Thinkorswim has a flavor of that. Let's go to style settings. And this is a SPY ETF. I'm going to switch it over to monkey bars. Okay. And I'm going to stop right here because some of you, what's SPY? What's an ETF? Now, there's a certain prerequisite to this stuff. So I'm also going to include a link here. And this is to an educational section of Hot Stock Market. And here there's no such thing as a dumb question. This is something that if you don't know what an ETF is and you don't know what SPY is, maybe this video isn't going to be exactly your cup of tea. For those others, let's take a look at these monkey bars. And let me shrink myself down a little bit. Let's go over some terminology first. These rectangles here, shaded kind of gray, these rectangles are called value areas. Thinkorswim likes to call it the playground. You know, monkey bars, playground, get it? And the theory being that if it gets outside the playground, it's considered unfair. Where, okay, next terminology, these are what we call point of control. You want to think reversion to the mean when you it's point of control is where the most trades are taking place, the highest volume, and that's what we consider the fairest of value. And going back to the playground, this rectangle represents where 70% of trades are taking place. So, one of the first theories that jumps out at me is that every time it gets outside of this playground would, in this case, going short would have rewarded traders. Gets outside of the playground, going long here, and made a big move up into this playground area. So you can see every time it gets out of the playground, the reversion to the mean. There's also meaning in the point of control being at the upper end of the playground too. So, and then you're going to want to also confirm with other studies, oscillators, and I'm going to get into a little bit more of that too. There is an aggressive way and there's a conservative way to trade. So I don't want to go too much more into this. Let's keep it short and sweet. Next off, I'm going to go somewhere else off the beaten track. And I have literally, let's see if this is opening up. Come on. All right. Rock Sexton, I have literally read this guy's posts from years back, and I've also watched this guy has evolved with the market. Your trading styles have to evolve with the market, and his latest approach here, this is really interesting stuff. So let's get a little bit into this. He's calling this as divergence and reversion trading. So in relationship to price and whatever flavor oscillator, MACD, RSI, you see right here, price makes a lower low, your oscillator's making a higher low, and then that would be your buy signal. Now, of course, there's an aggressive way to do this. There's you buy aggressively here, or wait for what Rock talks about, some other trend line break or MACD cross, some other confirmation would be the conservative way to go about that. So this is great stuff to read, and now this is 13 pages of text for you to read. So the point here that I'm trying to make is that there's lots of information out there. It's free. There's ways to go about this information, and hopefully this will just give you a little nudge in the right direction. Last off, I want to get into something else. Before I go, there is a lot more to this. I just went over this one. But if you look into this, this is stuff that totally makes sense. Last thing I want to get into is our own HotStockMarket.com executive editor Gil Oren likes to use an old adage: VIX is low, it's time to go; VIX is high, it's time to buy. And it's as it turns out, there is a study for that. These are all kinds of different what do they call them? Studies for timing, when to enter and exit the market. And I found out that there is, let me go, this is a S&P 500 chart, and I'm going to load this VIX entry and exit. So Thinkorswim even has something in timing for the VIX. I thought that was kind of interesting. So that's all I got for now. There's information out there, and again, I'll leave links to all this stuff. And 10-4.
Lift your heart and case your hill, 'cause with the birds that shed it's so long.